biggest lie banks tell us is that our money grows in our bank accounts. The truth is, while money grows in number because of interest, it doesn't grow in value or in real terms because with inflation soaring through the roof and bank interest lagging way behind, keeping cash in the bank is burning a hole in your pocket. In this video, we will tell you about 7 assets that will stop the wealth erosion and help you create intergenerational wealth. Watch to the end and you will have all the information on the end screens. Like, share, and subscribe to this channel, and follow for more wealth, financial, and life insights. Let's begin with gold, silver, and platinum, which are called God's money. One of the biggest reasons money is considered valuable is because it is used to store value for the future. However, governments today print more and more money to finance their deficits. You never know when that piece of paper you call the dollar will become worthless. This is why I recommend investing in something valuable that is scarce and can't be created easily. This is the biggest reason the rich have a portion of their portfolio always reserved for precious metals. Precious metals such as gold, silver, and platinum will always rise in value. Before the 1950s, an ounce of gold could be purchased for $400. In 2024, that same ounce is priced above $2,400. And according to Prime XBT's gold forecast, gold is supposed to go up to $10,000 by 2032. In about 10 years, your gold investments will be worth 5 times what they are now. So while cash keeps going down, gold keeps going up. Similarly, with precious metals, other precious metals are also better than holding cash in the bank. If you are wondering how to invest in gold and add it to your portfolio without buying physical gold, you can invest in gold ETFs. Gold ETFs are highly affordable investment vehicles that give you returns based on gold price movements without having to actually hold physical gold. The second asset is industrial commodities or raw materials because they hold value due to scarcity. And one reason why precious metals are so called precious is they have natural utility value, and this makes them indispensable. Industrial commodities like silver or gold are used in the production of electronics, medical equipment, nuclear reactors, and many other uses. Similarly, other metals such as cobalt, nickel, and copper have high industrial demand due to their natural properties, which can't be easily replicated by alternative materials. To draw a much clearer picture, since 2020, the demand for cobalt has skyrocketed, and one reason could be it's crucial in producing batteries for electric vehicles. Commensurately, its prices have risen from $20,000 per ton in 2012 to $40,000 in 2024. That's a 100% increase in just 10 years. Having such raw materials in your portfolio can significantly boost the value of your holdings. However, not everyone can invest huge sums of money in acquiring raw materials, nor can we physically store them or find the right buyers. Therefore, investing in stocks of mining companies such as Rio Tinto Mining, focused mutual funds, or even derivatives such as futures and options are all great ways of investing in these products. Safe haven currencies are another value-based instrument. In the current world of fiat currencies, there is no currency that is backed by gold. Geopolitical stability is a crucial factor in investing. This is why the rich have always kept much of their money in Swiss banks. Switzerland has one of the world's strongest economic systems and offers a much more stable geopolitical environment. Therefore, the Swiss franc is considered a safe haven asset. In times of turmoil and instability, it has been proven as a safe haven asset over and over. As an example, during the Eurozone debt crisis in 2009 and in the global financial crisis in 2008, sizable funds were diverted from many countries to Switzerland to prevent wealth erosion due to currency depreciation. The Swiss franc acts as a valuable alternative to the US dollar for international trade. For example, during the recent Russia-Ukraine crisis, when the US imposed sanctions on Russian energy trade, Russia executed trades in the Swiss franc. Such events increased the demand for the Swiss franc, leading to its tremendous appreciation against all other currencies. In early 2023, one Swiss franc fetched 1.11 US dollars, allowing Swiss franc holders to see increases in their wealth overnight. Superior currencies such as the Swiss franc are a safe way to store value. Not all of us can open a Swiss bank account, so currency ETFs and forex brokers such as forex.com help smaller investors gain currency exposure with as little as $100 of investment. Next, what are sovereign guarantees? Have you ever looked at the dollar very closely? It has the words, "This note is legal tender for all debts, public and private." Do you wonder what that means? In 1971, President Nixon abolished the gold standard. The dollar became the legal tender. By US law, this made it valuable as a medium of exchange, and we started considering it a commensurate repayment for any goods or services. Although no fiat currency in the world is backed by gold or any other physical asset, they are still considered to be backed or guaranteed by the full faith and credit of the government that prints them. In plain terms, your money is just as stable as the government that backs it. This is why investing in sovereign guarantees is a good way to keep the value of your investment. The government of any nation is always the last to default. If the government defaults, the whole nation will default, and no strong government will let that happen. Therefore, one of the safest ways of investing in sovereign guarantees is through government securities. However, only stable government securities with investment-grade ratings are advisable. Remember 2009's sovereign debt crisis in Greece? IMF Eurogroup had to bail Greece out of its debt multiple times. Now, before investing in sovereign guarantees, a government's global strength should always be considered. In the US, you can invest in Treasury bill notes, in bonds, to gain sovereign guarantee investments. These offer better returns than keeping money in the bank, and they are also backed by the US government's strength. In the global economy, small investors can buy Treasury securities directly from the government through the Treasury Direct portal or through the secondary market. The fifth asset I want to recommend are value stocks and mutual funds, which are another value holding instrument. Now, Treasury instruments definitely provide a better return than cash. However, because of the low risk they also offer lower returns than stocks. And while low risk is a crucial investment criterion for risk-averse investors, higher returns are sought by almost all investors. And stocks are a great way of achieving that goal. Not every stock is equally risky. In fact, the stock market is broadly divided into two types of stocks: value stocks and growth stocks. Growth stocks, such as technology stocks, are riskier because they deal in ideas and technologies with a high failure potential. Value stocks, such as Nucor, which deals in industrial metals, are less risky due to established demand for the foreseeable future. Therefore, value stocks with strong fundamentals not only provide steady and stable price appreciation, but also provide stable dividends. However, researching the fundamentals of every value stock can become very time-consuming and cumbersome for the average investor. Therefore, funds such as the Vanguard High Dividend Yield Index fund provide shares with a stable dividend-paying history. The sixth asset class we want to discuss is land and real estate, which have always been a safe avenue for value soundness. Accountants consider land a non-depreciable asset for a very valid reason. It is scarce and always in demand. Since the beginning of time, land has been one of the most valuable resources in the world. We need land for homes, schools, factories, agriculture, and commercial spaces, among others. And with a growing human population, its demand will never diminish. Similarly, residential homes, office spaces, and commercial properties built on the land are always in demand. Therefore, both land and real estate act as excellent inflation hedges in your investment portfolio. According to a Bloomberg study, housing prices tripled between 1992 and the 2020s, despite a huge dip during the 2008 housing bubble. Having real estate holdings always comes in handy when the dollar starts losing value. Now, most small investors only think of getting into real estate much later in their lives because they only think of real estate in terms of the house they live in. While owning a fully paid home is a net worthy goal for when you are older, having a slice of the retail property is recommended at every age. You don't need to have a lot of money to start investing in real estate. You can invest in REITs or real estate investment trusts, which are similar to mutual funds but for real estate. One of the most popular REITs in the US is Ventus Incorporated, or VTR, which invests in healthcare, real estate, including senior housing, research facilities, and hospitals, among other types of properties. You can also borrow to own rental properties of your own, and if structured correctly, your rent will take care of the expenses and mortgage payments and also bring you a profit. Now, the seventh and last asset group I want to discuss today are collectibles, which have always been a favorite of the rich. Vintage cars, rare art pieces, handcrafted luxury handbags, limited edition watches, and even the first edition of iconic books fall into this asset class. With a regular car, the price depreciates by half the moment you put it on the road. However, the math works in reverse for vintage cars because, like wine, they get more valuable with time. According to Autocar, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe was sold in 2022 for an eye-watering 135 million euros. Only two such cars have ever been produced, and therefore they are considered rare collectibles by car connoisseurs. Similarly, in 2017, Leonardo da Vinci's most controversial painting, Salvator Mundi, was purchased for a massive $450 million at a Christie's auction by a Saudi prince. The reason why the rich spend significantly high amounts of money on limited edition products is that these unique pieces are timeless repositories of value. They can fetch an unimaginable high price if you find the right buyer. For the average investor, investing in collectibles can feel like a distant dream. Therefore, online marketplaces are fantastic options for selling rare baseball cards, comic books, action figures, and much more. But if you can't buy the whole thing, you can even invest in partial ownership of collectibles on platforms such as Convey and Masterworks. If you've made it this far, please consider sharing this video and channel with as many people as you know. Sharing good into the world is a proven way of getting even more good back into your own life. Subscribe and like this channel. And please send any thoughts or questions by commenting. I will gladly answer any questions or thoughts you may have.